Hello everyone, it's April 13th and welcome to another edition of Kajika Trades. Today I'll be going over how I approached the market and the trades I took today. So yesterday, we came down after a little bit of a gap up in the morning and ended up closing, not on the lows, but I think we were just red in Apple yesterday. Let's see the open. Yeah, just red. But anyways, coming to today, we had a pretty narrow Fab 4 looking over here in the last hour of the day. Still have this little trend line that I was looking for a breakout on this little flag pattern we were putting in, or channel, whatever you want to call it. And so as we came in to open, we held this POC at 166.83 right here, as you can see. These are just my notes, so excuse these until I'm actually talking about my trades. The first trade I took was at 938, and my entry was 167.57. So right about here, right where this bar closed. But obviously, I entered on the initial move up into this wick before we came down into the close of that bar. And what I was looking at is came down, held this POC, came up to retest, this congestion, as I said here, still in congestion. Congestion, we got the VWAP, we got the 8, we got the 20. So a good position to look for a trade out of, but not really necessarily a trade into. And that's kind of what I chopped this trade up to, and to why I came back to break, actually stop me out for a loss. So I took this entry at 167.57 and the move up to the wick. Thought we had continuation, thought we'd at least get to the 200 as we did, 2 bars later. But I failed to recognize, this is our first attempt going into theirs. We should prove that all of this congestion here is support before we end up going higher. We're also, we're coming into this pivot level at 167.75. As you can see right here, it was a support. This is where we open. Support, pivot level here, pivot level all through here, turned into resistance right around here. So should have expected that this wouldn't be easy to go through in a 1 bar, even though we are at the beginning of the day and we should have volume and the attention. So ultimately get stopped out on those 940 bars. We came in and put this wick in. And really what I should have recognized is, okay, we're coming, broke through all this again, couldn't hold it on this close of this bar, right at this POC and this congestion. Next bar, we're actually taking the trade away from the congestion. Here, because this bar started below the congestion, we're coming into the congestion. It's unlikely that we're going to get, the whole break of this in one move. So really what we should expect is to confirm that this is support and then launched off of this, which we subsequently, right after my stop out, this should have been my entry, not on this bar. And we get that move to the 200 like I was saying. And why we're looking at the 200, once again, pivot level, POC, multiple variables here that we're looking at. Excuse the red line, that's from a daily thing that I just have I have the internal fade out, but the border is still present. Next trade I took was a short in Apple. What I looked at here is we had this move up, got over the 200, far from the 20, got this big red bar, got no continuation over the top. Like I said, pick kind of a pivot level in here. And then we get this, I treated this as a double top kind of, held the 200, double top, next bar. I took the 952 entry short as we broke below. 168.08 was my fill, so right below the 200, and subsequently, as you see, get stopped out in 954 bar when this wick was fully green and we were engulfing my entry candle. And I kind of chopped this up too, similarly to this trade, once again, trading into the congestion, not out of it. Also, I'm going against the trend, so you can see, where's the brush? This is what I'm saying is our trend. We have this move up. Should be expecting a move down before going higher. So I'll leave this here for now. So bucking the trend because we have this upward trend, and I'm trying to take a short into it. I have the 20 going against me. I have a flat 200, which here we can ignore. It is a support resistance level, but I was ignoring it for the sake of this argument. I think it's more about the fact that I was just bucking the trend. Interest was here. Let's see. The volume was less than the prior bar. But I think I had the right game plan, but otherwise Apple just kind of, traded choppy. Wasn't that good of a trade right through here. And unfortunately that can happen. So, I fought this chop, and next bar, gave me that move back to the 20. I was looking for a move in here, so when I was trading, I actually threw in a rectangle right here. And the reason I did that was I wanted to say, all right, we got this pivot level here, VWAP 20. We should always be looking for a move back to that. And additionally, I believe this is a golden pocket 50% retracement range. Yep. So there's your 50% level, wicks right off of that. And that really was the money trade of the day. Recognize the trend, look for a pullback, a viable pullback, and take that long. I think we're up at 170 now, so a nice $7 long. $7, my apologies, $3 long. But the trade I did take, that was my only winning trade on Apple today, was I took this 1002 candle. I took it at the end. Actually, I didn't take the 1002 candle. I waited for this to um, fill out first. After these two losing trades mentally, I wanted a little confirmation, which hindsight, that shouldn't have been my approach. I should have, stayed sharp and stayed recognizing what the chart was giving me. Bounce off 50%, VWAP 20. That's the entry should be down here, but I took the entry up here at 168.25. So as you can see, it's a full 40 cents away from where I really should have been in the stock. So I took it here once we got above this red because I was like, okay, now we've erased this entire move down. We're back into being above this, top of this Fab 4 zone. We got a POC, the 8, and 200 there. And I took off half at the double top here, which, that was the price target the whole time. So I took off there, and I should have recognized that was the price target. And this bar came in, and I liked the way it closed, so I eventually risked this bar. I got stopped out on this 1008 bar for the rest of my runners, but I was risking to the bottom of this red bar because I figured if we were going to put in any push down lower below this bar, whether that just be the wick or a body, we were ultimately going to roll over. And as you can see, it didn't roll over, had a quick drop, quick pullback, right back to this 200 POC level 20. Somebody wanted some more orders more shares before we ended up going long. So I was a little upset with how I handled this. I really should have recognized the double top and maybe taken off more there and thought to myself, okay, this is a very quick move. Probably just going to come back to 20. Double top here. This is the stronger long. But at this point, I moved over to the Microsoft, which was my big winner that put me green on the day. But in hindsight, I wish I handled it a little bit better. Fear and emotions from those prior Apple trades were really, took control of my decision making once I was profitable on the day. So when I came from Apple to here initially, I recognized that we were still in this Fab 4, but because it's so huge, that's just a weak zone. That's actually a tad lower. Not that it really matters, but it's just a weak zone, and the variable of the Fab 4 is probably going to hold. It has lesser weight when we're looking at trades here than if it was a more narrow zone like we did have in Apple. But I recognized here is okay, little consolidation. We're coming up at, like I said, we had the little double bottom that happened in most stocks yesterday before we closed. Had a little rally into close. Came back, held about 50% of this move up. So that's where we're looking, 50% move, hold it, even hold it on the body close above this pivot level here at 281.75. Push up, once again, pull back, VWAP 20. And this is that long that I took in Apple, and this you can see was very similar in Microsoft here. The long I took in Microsoft was I took this 1014 bar, and my fill was 283.26. So right as we got over this wick, as I should have done in Apple, I came over to Microsoft and I hit the correct long, and my game plan was correct. Now, unfortunately, I feel like I said the fear and emotions for prior were clouding my memory. Oh, I'm sorry, this is a yawn. And what I did was I was looking. I had these circles. I didn't have them drawn, but I drew them, on the chart afterwards because I was looking for the 200. The 200 was the most likely spot. If we were going to break out, we're going to the 200 immediately. And then if we got to there, probably imagine some type of pullback. But ultimately, getting up to this POC level at 285.34 just made the most sense. And you could see that we hit both those price targets, whether, you could have gotten a fill on this wick or, you probably would not be able to survive this pullback. Maybe if you saved through this, then you probably would have because you would have seen the double bottom here and the switch of this resistance to a support through this zone. And you would have gotten your move whether, somewhere in here. But ultimately, I entered here 282.26, and I sold on the 1016 candle. So I love this continuation over, and also if we pop over to the 5 real quick. This 5-minute candle is just beautiful. So we have all this little consolidation, comes back, holds VWAP, close on this candle, above all these wicks. I should have trusted them more than I did. Anyways, going back to the 2-minute. Sold on this the second this candle went red. And sold out. My fill was 283.91. So literally the second it went red. And in hindsight, that's literally just fears coming in, and that's why I wanted to come here and talk about this trades, because this is something that I need to work on and maintain my discipline, because ultimately we get that price target of 184.50, the 200, and that's another 60 cents I left on the table. And ultimately we get my POC price target, and that from here, let's see, 285.30, so that's $1.40 left on the table. Those are home run trades. Sure, I did get, what did I get? I think I get 70 cents. Yeah, 283.91. Or 75, 65 cents. 65 cents on that. So we'll be better, but this is just something that I need to work on and recognize. Additionally, there's no reason to be out of this trade, because if we treated it the right way, if we didn't do this entry and survive this, which would have been pretty hard with the double top and that big red bar, but we take our entry, go to break even stop on our runners, recognize that we're turning this level here that was a resistance into a support. So it came into once, twice, breakthrough, turn it into support, double bottom through here, off that now, resistance turn support, and she never looks back. Once again, we did the same thing here, turning this 284.75 level into a support, waiting for the 8 to catch up, right back up there. Then we turned this 285.30 level right at this POC, double bottom off that. Could have taken an add anywhere here. Maybe they add here off the 20, get another move to the next POC, 286.75. So something to work on, and we'll try to have a better macro approach, and as always, work on those emotions.